Yeah, I'm losing my
Today,
edge.
let's talk about trading trends around the election. We're about 3 weeks out.
Time, isn't it? Yeah.
Exactly 3 weeks out from this election. Yeah, you wouldn't know it because there's an insane thing that happens every single day. And we're getting close, though, to the election. And what I want to do, Pete, here on out is every Tuesday, just look at something that people can use in their trading strategies, something that they can implement into their portfolios around this election to get ready for it, maybe manage some risk, make sure that they don't have too much going on into the election, or just at least have some context around what tends to happen around these every 4-year presidential elections. But then also, at the end of the day, hopefully try to be able to make some money off of this election, because, you know, you vote, hopefully you go out there and vote for whoever you think should be running this country. But also, it's like one of these things that you can maybe hedge those emotions against. It's like, oh, I love the Chicago Bears, but they're probably not going to win a lot of games because their quarterback situation is awful. I can bet against them every week and maybe make some money while I'm wallowing in the fact that my team didn't win. So we'll see what happens with the actual election. I want to talk about some trading trends, though, Pete, because we're getting closer and closer.
Wow,
and,
this is wide. I didn't realize it.
Yeah, it's gotten pretty wide, which might scare some of us here on that blue
Frankie,
side there. But
tell me this: I've looked at
yeah.
this from occasion to occasion. I understand
Yes,
the
sir.
concept of how you play. How can, again, is the 5 cents the VIG? I mean, you know,
Yes, exactly.
60% yes, 40%. And you could argue that it's 65 or it's whatever it is. So the 65
it's probably realistically
somewhere in the middle. 62 and a half, 42 and a half.
Like 62. Well, yeah, actually, no, there's probably VIG on both sides. It's probably like 62 and a half, 37 and a half, or something like that. And so what Pete, I put together this great presentation around trading trends and electoral college and the markets around all of this. And Pete dives right into the VIG, which is a great thing that we should talk about. But it's like, it's the most high level take on this.
It really is. For me, it's fast. I'm not as paradoxical as it seems. I'm not a gambler. I don't, I'm not a fan of, Vegas is a beautiful town. I have no interest in sitting down at a table and knowing where the odds are materially stacked against me. We've been talking about some of the analogous pieces of gambling and the challenge of expense of gambling, of expressing opinion versus expressing opinion of trading. So I'm going to stop talking because
you're good. You're good. You're kicking this off, and this will help me explain what's going on here. So we're seeing Biden there. You got 65 cents, and you got Trump at 40 cents, and those pennies are going to align to the percentage chance that predictit.org is saying that these two candidates win the presidential election that's in 3 weeks. And Pete is rightfully bringing up the fact that, hey, 65 plus 40 doesn't add up to 100. It adds up to 105. And that's because, like casinos in Vegas and everywhere else that you can bet on things, gamble on things or whatever, there's a VIG there. So the odds should add up to 100, and probably should be, if I wanted to buy Biden, it should be more around 62 or 63. And if I wanted to buy Trump, it should be more around 37 or 38. But there's a little bit of VIG here, because this isn't, and not to shame predictit.org at all, because this is a tough market to hedge. And so while these people, I think you're trading against just other participants in these predictit.org markets. There is a little bit on top there to not make it as it maybe should be. But thankfully, Pete, good transition here. Futures markets, there are so many participants, and they're so efficient, and there's so many different ways to hedge a stock index future and everything else. There is, and we've talked about this in the past, so little VIG that you get that efficient price that professionals are getting and market makers are getting and everyone else. But so this is what we got here, the current situation. Take it for what you will. I didn't put this segment together to have opinions on whether Biden, it should be closer to 50-50 or Biden should be closer to 100 or whatever. I just want to look at these odds that have changed dramatically in the last couple of weeks here and will continue to change dramatically as we approach the election, and treat them like prices. Because I like that predicted.org does this. It's a price that's been moving for the last several months, and we can monitor that price the same way that we do monitor our stock indexes and our commodities and financial instruments and everything else. And we can compare those prices of a Democrat or Republican winning the U.S. presidential election in 3 weeks to assets that are readily available that we actually want to trade. Once again, I'm not trying to waste everybody's time with, oh, here's Frank's 2 cents on the election that's coming up. No. We talk about trading things that are readily available, and we're going to compare our small stock market, the SM75, our small metals market, which is gold, silver, and platinum, SPRE there, and then our small U.S. dollar currency foreign exchange market there, SFX. I want to compare these prices to Biden and Trump over the last 90 days, see if there's any correlation, anything to be had, and then I want to go even further into history and look how these asset classes responded to Democrat, Republican, first-term Democrat, first-term Republican, and look at all those data points. Before we dive into the numbers, Pete, do you want to give your decades of experience what you think would line up here? Is a Democrat being elected, is that good for stocks, metals, and U.S. dollars? Is a Republican being elected, is that good or bad for these three markets? I know you're shaking your head already, and I agree with you that it's hard to kind of guess anything is going to happen depending on the context of the person elected, not only just their party. But what would throw a guess out there? What do you think, given you've probably traded like 7 or 6 or 7 different
15
elections?
or 20. Yeah.
Oh, geez. Okay.
I'm not 80. I'm not 80 years old, Yamat, but I appreciate that.
What
20 times 4 would be 80.
Oh, yeah. No, that's not.
You missed that day of Michigan math.
Well, that's what I said. Like, you've traded like 6 or 7, right?
I know. Yes, but
that's probably better. But what's your experience here?
I think there's 3 things. One is the outcome. The timing around the outcome is uncertain, so that makes trying to guess direction much more challenging. So, from everything we hear, the outcome will be a week or 2 weeks, or depending on process, even longer to figure out. And then there is the immediate reaction out of certainty of an outcome, and then let's call it the longer term reaction. And I think each one of those is materially harder to figure out now than it had been previously. I think that, you know what, in either case, both metals and the dollar will probably get a bid tone depending on who's elected, because the case will be one guy will spend more money on infrastructure. And I'm not making a political judgment. One guy is committed to spending a materially large amount of money on infrastructure and jobs and school and other pieces. And the other guy is very much about cutting taxes more. Both of those lead to just materially huge budget deficits on top of the huge budget deficits we have. If that's the case, I think we would probably see metals have an upside reaction along with an upside reaction of the dollar. Stocks are a pick 'em. I just, we're at elevated levels. I think the nuance is what sector of the market. If Biden gets elected, tech gets hit harder. So you'll see NASDAQ fall and some of the broader indices hold in. If Trump gets elected, you probably will see the entire market rally, but tech will outperform it. And that's only from the nuanced discussion around which sectors will get the bulk of the money or possibly be more regulated. It is a very, and each of those explanations can trap you in a box that is not comfortable. So don't take any of them. I have no certainty or confidence around. We talk about guessing where the SPOOs will be in 2021. I'd rather do that than pick these because of the unique nature of the whole process here.
Sure.
I think but what you'll be afforded with is initial movements and then retracements and then possibly corrections, which I mean move in the opposite direction, and center. There'll be a lot of uncertainty played through, and that uncertainty will be exaggerated because liquidity will be thinner. And I think that's where your opportunity is.
Yeah, I know. I appreciate you putting together all of those ideas and going out there, going through kind of like macroeconomic, what this means if a Democrats elected or Republicans elected, how much they're going to spend and what sectors tend to get hit. But you're totally right, Pete, based off of a ton of assumptions. And I want to get back to that note in a second here after we go over some numbers. So I ran some correlations between stock movement in the last 90 days and the Democratic and Republican candidate. And as you can see, a little bit of actually a negative correlation,
Yeah.
slightly negative correlation between that stock market and Biden, and a slightly positive correlation between that stock market and Trump. Metals, a little bit of a similar scenario here, where you saw on days that Biden was moving higher in this predicted.org measure, he's gaining points on Trump. Metals tended to move lower, vice versa for when Trump was moving higher. And then you have the dollar piece, which I was kind of surprised by. But once again, these correlations are all within 0.5. So really nothing to hang your hat on either way. But I was surprised to see some US dollar bullishness on days that Biden was creeping up in this predicted.org measure. I mean, is there anything here that is interesting to you or that you could see continuing to play through the actual election in 3 weeks?
I think you're right. Number one is, are they statistic? I mean, doing this is great. Are they statistically significant?
You don't have to be nice about it. Just say
no. The numbers are not. No, I just again, I don't see this as a tool to give me a bent. I don't. I think it's interesting statistically that you see this dichotomy between metals and the dollar. The stocks, I would expect, would be even more random than that. They're not.
Sure.
And maybe that's discounting the fact that there'll be more regulation with the Democrat, and that's the only thing that's materially affecting the markets, and less with the Republican. I think the actual answer will be more nuanced, but you can't argue with the numbers.
No, I agree with you. So let's dive into, like I said earlier, the assumptions that this stuff is based on, or that nuance that you're speaking of. Because if we go back to the last presidential election, it's the first time, the first time that Trump was elected. We'll see if he gets his second term in a couple of weeks. But so you had a transition from a Democratic to a Republican presidency here. And you actually, in the long term, Pete, saw kind of what I would have expected, which is stocks, interest rates, and dollars rising off of that event. But I know you remember this, Pete, and I hope a lot of people at home remember this. As Trump was, the scales were moving in his direction. The night of the election and all those results coming out and going into the morning the next day, we saw the stock market diving lower. We saw interest rate markets, yields moving lower, and bond prices skyrocketing. We saw gold moving higher as well. And we saw that US dollar getting hit while all this stuff was going on, because, like Pete said, that nuanced piece where you had a Republican entering, and for all of the, like you said, tax breaks for larger companies and less spending on public goods and everything like that, you would expect these trends to play out. But you always have to keep in mind that context here around it, because there was a lot of fear as like I said, the scales were going from Hillary to Trump. But the long-term trend is pretty, I mean, it's pretty hard to not make the case that right here off of the right here, early November, you see, yields move from being negative on the year to being positive on the year. You see the stock market here going from being about unchanged, up 5%, to the rest of the year being up about 10% on the year. You see the dollar go from being unchanged to up a couple of percentage points, and you see gold going from up 20% to just barely positive on the year. I mean, you can't really debate those reactions to Trump's election in 2016.
No, absolutely not. But the one caveat I want to put to that is, when we started that, you look at that change in the 10 years and it's dramatic, but we started from a much lower price point. In other words, higher yields and lower bond prices. Same thing for gold. We were at $1,200 gold, not $1,800 gold. And we were, the dollar was at the higher end of the dollar. So that's interesting. SPU's dramatically different price levels than where we started all this from. So does that change it because we're starting this race, for lack of a better adjective, from a different starting point, possibly? But I think this is really, this is very good context around,
Sure.
what to expect.
Yeah, and I actually do want to make the case less for Republican versus Democrat and what that means for your stock market coming up after this. That's not what I'm getting at.
Right.
But what if we do go further about Obama's second election in 2012 saw no trend whatsoever. Okay. And I would almost make the case, because now let's go back to 2008, his first election there in 2008 of Barack Obama. You do see some movement right off of this early November that is actually pretty opposite of Trump's movement. Now, that being said, 2008 is a year in everybody's minds in terms of stock movement and everything that was going on in the banking system and elsewhere. And so once again, it's one of these things that I would make the case for. It's intriguing to watch. It's something that you're going to see volatility and fear build going into the event. And then afterwards, I would almost say if Trump is elected again, I would expect very muted little movement, what has changed really for the stock market and everything else. If you get another 4 years of
continuation policy, sure.
That's kind of what we saw. That's kind of what we saw here. The second election of Obama, where it's like, oh yeah, we had 4 years of this guy. There was not really any point where it looked like he was going to lose, and so now we're just going to have the rest of our 2012 and not really worry about it. I would guess the same thing if Trump does start to gain back some of that ground and he is elected here in November. And that being said, if Biden is elected in November and you do have a changing of the guard from Republican to Democrat, I think the night of or the days or weeks that it's going to take to sort all of that out is going to be ripe with opportunity to merely trade both sides of just pure price action. That's going to be great, Pete. And I don't want this to go much longer. I like most Americans here, just want this to be done with.
Right.
But the nice silver lining is if it does go longer, you're going to see these huge daily moves that you can just kind of get opportunity on the other side of, with no care for if it's Republican or Democrat, Biden, Trump, that. I think that's going to be great. But trying to figure out a trend going after this election is really difficult. It has so many assumptions, like we got to here, it's like, Democrat is elected in 2008, but also we have this big financial crisis going on, and there's so much going on here. And then you talked about in 2016, yields are rising like crazy after Trump's elected. They were at zero.
Right.
And we know that the Fed tends to want to not do anything until the election is put through. Right. And then they go with some aggressive behavior. So once again, I don't think you make a trade or look for a trend around Democrat versus Republican. I think you look for opportunity in the price action and the volatility leading up to and going throughout the election. And then, base your assumptions on what is going on in this market, not necessarily. At the end of the day, the leader of the country wants to stabilize anything that is crazy that's going on and anything like that. If Biden's elected, he's not going to want to take Amazon and Apple down to $0 stocks. So I don't think that you can trade or put too much weight behind any of these trends, Democrat versus Republican, but there will be plenty of opportunity.